This is Dr. Bhuvaneshwari from St.Joseph College of Arts and Science from the Department of Commerce Bank Management. Today we will see about banking law and practices subject. The topic is regional rural banks. So first we are going to see about the introduction of regional rural banks. The regional rural banks were established in 1975 under provisions of the ordinance which is promulgated on 26 September 1975 and Regional Rural Banks Act 1976. Regional banks which have been established in rural India are intended to play an important role in rural credit. They have evolved into low cost rural based institutions. So these regional rural banks, they offer credit facilities closest to the poorer sections of the rural population, which will help them to free from the grip of the moneylenders. So in addition to it, it should be noted that small and marginal farmers, agricultural laborers, artisans and other vulnerable groups in rural areas are the primary recipients of loan assistance from these regional rural banks. So the regional rural banks in India are the scheduled commercial banks which conduct various banking activities for the rural areas at the state level. So, the name itself suggests the regional rural banks cater to the needs of the rural and the underprivileged people at the regional level across the different states in the country. And do you know what was the first regional rural banks in India? It is the Prathama Gramian Bank, which was established on 2nd October 1975. And presently, there are 43 regional rural banks in India. Now let us see about the historical perspective of regional rural banks. In the mid of 1970s, it was recognized that more systematic and coordinated efforts were required in order to strengthen the flow of the institutional rural credit. So what was the aim is, it is to develop the rural economy by providing credit for both agriculture sector and non-agriculture productive activities. And this was done with a focus on the most vulnerable groups like smaller marginal farmers, agricultural laborers, artisans, and small businesses. So, in its report dated on July 30, 1975, the working group, which was headed by by Shri M. Narasimham, recommended the establishment of a new type of institution in order to supplement the efforts of commercial and cooperative institution in the rural sector. So, such rural banks are to be established in areas with a weak credit structure. So, next is this was the start of regional rural banks, which made rapid progress in the decade that followed. So, the first 5 regional rural banks were established on October 2, 1975 in West Bengal, Uttar Pradesh, Rajasthan, and Haryana. In 1977, the government established the Review Committee on Regional Rural Banks, which was chaired by Professor M.L. Dantwala. And what he did is, his work is to investigate the operations of RRBs. So the committee made a lot of recommendations, including encouraging the establishments of RRBs in areas where settled cooperative banks can be converted as RRBs. According to the committee, the better off segments of rural society should not be completely denied credit because this would create a negative impact on mobilization and this will depress it. And what do you mean by regional rural banks? What are those regional rural banks? So these regional rural banks were established in accordance with the provision by an ordinance promulgated on September 26, 1975 and the RRB Act 1976. And the goal of it is to ensure adequate institutional credit for agriculture as well as other rural sectors. So these regional rural banks were created with the intention of combining the strength of cooperative and commercial banks. So they hoped that this would provide cheap and adequate credit while also being operationally efficient and this will be easy to assess. So, what is the primary goal of these regional banks was to end the rural debt culture and close the credit gap which has been existed between the geographical regions. So, these RRBs are operationally sponsored by scheduled banks, which are typically public sector commercial banks. In continuation to it, instead of burdening the commercial banks by extending their operations over large areas and spreading resources that RRBs were thought to be able to function intensively and confine their operations to a single region consisting of one or two contiguous districts. So, these RRBs operate similarly to commercial banks with a smaller geographical reach for each of them. So, central government, state government, the Reserve Bank of India, and smaller banks all work together to establish new RRBs and assist them in their operations. Since 1976, the RBI has primarily carried out promotional functions which state governments carry out, while the state governments carry out statutory functions. RRBs are jointly owned by Government of India, the relevant state government, and the sponsor bank, and that is the ownership of the equity of the regional rural banks is held by the stakeholders, and that is in a fixed proportion. That proportion is 50 is to 15 is to 35. So central government is sharing 50 percentage, state government 15 percentage, and the sponsor banks shares 35 percentage. Sponsor banks like Indian Bank, Canara Bank. And the regulations of RRBs in India is there are two prime regulations, RBI and NABARD. And now let us see about the significance of regional rural banks. So every RRB operates as a commercial bank, and in addition to it, they directly grant short-term and long-term loans, and they have authority to mobilize savings also. So they give loans for the agriculture, allied activities, retail trade, and also for small and rural industries. And they also specially target the group of small and marginal farmers and landless farm laborers, rural artisans, and the others through the IRDP programs, integrated rural development programs, by extending credit to the poorest of the poor in the rural areas. So the regional rural banks, they have a priority sector lending target of 75 percentage, where the loans are lent to agriculture activities and vulnerable sectors. So these banks are also providing financial assistance to regional cooperative institutions and in low incomes to strengthen their financial basis, and also to enable them to play a more positive role as viable financial institutions to engage in rural development. The objective of these regional rural banks is they open branches in rural areas. They provide loans for the development of the agriculture sectors, especially to small farmers, agriculture laborers, and small entrepreneurs. They and also to generate a lot of employment opportunities, to encourage savings among the rural people, mainly accepting deposits and using those funds for productive purposes, and also to protect common people from the moneylenders, from the exploitation of moneylenders. And also they reduce the cost of providing loans in rural areas. The functions, what are the functions of this RRBs? The RRB functions as they have four types of functions. The first one is accepting deposits. RRBs accept deposits from their members who hold an account in the bank. Then the deposits which can be made in current or savings account. Depositors can also be made in fixed or recurring forms. And this way they accept the deposits. And the second one is loan extension, extending loans or loan extension. So the RRB Act of 1975, what it states that the RRB can extend loans and credit services to the priority sectors. So the loans to this sector are classified under PSL or priority sector lending. So the RBI announced the coverage of RRBs in PSL from the financial year 1997. Actually, so the priority sector, it comprises of small and marginal farmers, craftsmen, artisans, local traders, medium and small scale businesses, and so on, which needs a lot of development and financial investment also. 75% of the total bank credit has to be provided to the priority lending sector. Out of this total credit, 10% has to be given to the economically weaker section. So through this, the short-term loans on a low rate of interest can be extended by these banks to the priority sector. So RRBs cannot, however, extend large or long-term loans to their customers. Then third one is disbursement of wages, disbursing wages. The regional rural banks, what they do is, in India, they perform the important functions of distribution of the wages under the MGNREGA, the Mahatma Gandhi National Rural Employment Guarantee Act, the Pradhan Mantri Gram Sadak Yojana, PMGSY. Under these schemes, the the pensions, which pensions also can be provided under the poverty alleviation schemes and pension schemes of India. It is also distributed through these banks, through these RRBs. And finally, the secondary functions of RRBs. Similar to the commercial bank, the secondary functions of the regional rural banks in India is also providing, they are also providing agency services and general utility services to their customers. And agency services means like foreign exchange, bills payments, money wire transfer, are also performed by these RRBs. Utility services means like ATM, UPI, issuance of debit cards, locker facilities are also provided by these RRBs in India. The next one is the limitations. When come to the limitations, the most troubling aspect of RRB's operation is they are on an average losing money. The main factor which has contributed to their loss of profitability is that they exclusively lend to the poorer sections at a very low interest rate, despite the fact that their operational costs in handling small loans are quite high. But in spite of that, they lend at a very low interest rate. Apart from this, a loan recovery also is unsatisfactory. That is, they don't get back the loans what they have provided to the customers. The last one is the conclusion of our conclusion part. So in order to ensure this achievement of strategic goals, the RRBs, what they do is they set uh, annual performance goals based on its strategic goals and design to make continuous and measurable progress on their objectives during every budget year. So this planning process is in compliance with the Government Performance and Results Act. So the Government Performance and Results Modernization Act and OMB guidance, which require each agency to develop annual performance budgets, which are submitted along with the agency's budget request. So so they will monitor our performance throughout the year and they make adjustments as needed to achieve the desired results. Thank you.